Hey everyone! In today's video, we'll discuss one of the key skills you need to land a job in investment banking, private equity, venture capital, and financial analysis. I'm talking about financial modeling. By the end, you'll have a clear idea of financial modeling and how to acquire this invaluable finance skill. Having worked in financial advisory and built hundreds of financial models, I'd like to share some insights that I believe will benefit you. Moreover, in the last decade, I've had the opportunity to teach financial modeling to hundreds of thousands of individuals online. But before we get started, I would like to ask you a quick favor. Please hit the like button and subscribe to this channel. This will help us reach even more people on YouTube. Thanks so much. Okay, great. First off, what is financial modeling? Essentially, this is a technique that facilitates high-level business decision makers. We use financial modeling to depict the outcome of an investment project. We can support informed business decisions by clearly demonstrating our best proxy of the future in a model. You could be buying a company, investing in a real estate project, building a new production plant, or assessing the launch of a new product. Financial modeling is critical for qualifying potential risks, estimating returns, and evaluating different scenarios. The last part is critical. A well-built financial model shows decision makers a base case and allows them to appreciate the sensitivity of assumptions in various world states. Financial models go beyond mere calculation spreadsheets. They qualify as models when they feature logically interconnected calculations with transparent relationships among components, revenues and expenses in the P&L, assets, liabilities in the balance sheet, and cash flows must all align seamlessly. A good financial model is easy to navigate and shows the outcomes of investment opportunities in an easy-to-understand way. This tool helps executives make financial decisions by providing a structured framework for analyzing expected future performance and outcomes. So, why should you learn financial modeling? The answer is simple. It will boost your career prospects significantly. Mastering financial modeling is a must if you wish to work in investment banking, private equity, venture capital, corporate finance, or financial analysis. It's simply one of the most sought-after skills in finance. Solid modeling skills frequently make the difference between an average finance professional and a top-performing one, and you want to take advantage of this opportunity to differentiate your profile and have much better prospects of getting hired, noticed, and promoted. When you own a financial model inside an organization, you can work with high-level decision makers, which is how you progress. Very well, then here's the roadmap I'd follow if I were starting financial modeling from scratch today. First, you need solid Excel fundamentals. There's no way around it. If you think your Excel knowledge is lacking, learn to use shortcuts, cut, copy, and paste columns and rows, and format your spreadsheet professionally. Additionally, work with fixed cell references, and use, among others, some ifs, XLOOKUP, index, and match. These must-have skills are the basis for your financial modeling journey. Another critical aspect is accounting. You don't need to become an accounting or auditing professional. Still, you need a good understanding of how different items in the P&L work and the relationship between various accounts in the P&L and balance sheet. At this stage, you're ready to build a complete three-statement model. Putting together a company's P&L, balance sheet, and cash flow is a superb exercise that lets you experience how the three statements are connected firsthand. I promise it will be a blast the first time you get your balance sheet to balance. I realize now that my financial modeling journey could have been much smoother. When I started, I had to learn best practices on the go. There was no structured guidance, and universities don't typically teach these skills hands-on. So I ended up watching colleagues, trying to reverse engineer their models, and figuring things out through trial and error. But looking back, this was far from efficient. Mastering financial modeling does not have to be a slow or frustrating process. Learning best practices early, like avoiding hard-coded numbers, Color-coding inputs and linking to source cells saves time and prevents costly mistakes. A structured approach makes all the difference, and learning from experienced professionals can make the process much more efficient. My colleagues and I created the 365 Financial Analyst Program to teach you all the necessary skills to build world-class financial models from scratch. Check it out. There's a link in the video's description. Okay, once you've built a three-statement model, it makes sense to continue and develop your first financial model. For most people, this is a company valuation model called a DCF, which stands for Discounted Cash Flow Valuation. You'll need minimal financial math knowledge and a good understanding of fundamental corporate finance principles. You must learn some financial theory to build these models. There's no easy way around that. Your first valuation model shouldn't be complicated. You can build a one-page valuation that makes some rough assumptions and isn't very detailed. The goal is to get used to the mechanics of the DCF exercise. Do this a few times, and when you become comfortable, you can build your own full-blown DCF model with more granular assumptions and detailed projections. The next step would be to create a model with a PP&E, debt schedule, and working capital assumptions. This will make your DCF model more realistic and comprehensive. A good financial modeler knows how to incorporate sensitivity and shows different scenarios by building dynamic assumptions that allow for easy adjustments to key inputs, such as revenue growth, discount rates, margin assumptions, and capital expenditures. This includes using data tables, scenario managers, and switchable assumption drivers to model best, base, and worst-case scenarios, ensuring decision-makers understand potential risks. Financial modeling is a skill that you'll pick up by doing. Every next model you build will improve your skills and require additional learning. The roadmap laid out in this video is how you will learn financial modeling the right way. Good luck on your finance career journey, and remember, we're rooting for you.